Hi, thanks for joining us. Today is another episode of Inside the Trader's Head. Today we have Ben, better known on Twitter at Pattern Profits. Appreciate you joining us, Ben. Thank you very much.
Thank you for having me.
Before we get started, just so everyone knows, this is just for educational purposes only. Nothing we say here is construed to be a buy, sell, or hold recommendation at all. Okay, so let's get started. Ben, start with those first few questions. Tell me a little bit about yourself.
So I started trading in the late 90s, as most of the people our age did. That was a very hot market, and a lot of people tended to get involved during that, real hot tech stretch. And it was my college roommate who was involved in the market, and I just kind of, followed his lead and got interested. And those were some great times. All you had to do was buy, and everything was climbing. Everything was, every day we were up 10, 15, 20%. It just needed to have .com on the end or internet exposure, and you made money. So that, I thought, boy, this is really easy. What a great, easy way to make money, and then into 2000, when the market corrected, then that's when you realize, well, it's not always like this. You can't just, buy stocks and they go up. And that's when I had to take it a little more seriously and figure out, if I was going to do this, how I was going to approach it. And that's where my introduction to the markets and trading come. And at that time, you still called up your broker and put in a bid, and I think it was like $50 either way, to trade. It was crazy back then, but it was fun, and certainly glad that I got exposed.
Yeah, absolutely. And so along the way, obviously you've been watching people and following people. And so over the time, who became the biggest influence to your current trading style?
There's several over the years that have had a big influence. Probably the biggest influence overall has been my wife, which she has a finance background, and pretty much everything I learned on the fundamental side of how to look at stocks, and the charts that you see me make of revenue and earnings growth and all that. She's the one that kind of led me to that, kind of style of looking at revenue growth and earnings growth. She was an analyst for quite a while. And so she had a huge influence on the fundamental side. And then on the trading side, going back early in my career, Michael Davey, he's known as Centrifugal on Twitter, not as active as he used to be, but he was one that really had a big influence on the Can Slim type, focus on leading stocks, influence on me. He used to have a blog even before FinTwit, was around. And he, to this day, still a friend, really great trader, and kind of influenced me as far as my style. I would say Jeff Kohler, who he was Option Addict at the time, Trading Addicts now. He's another one that had a big influence on me, especially with, trading the patterns and how to view them, the psychology behind them, kind of big picture of the market. Mm-hmm. He was a big influence on the beginning. More recently, Brian Shannon, Alpha Trends, using anchored VWAP, multi-time frame analysis. I use that a lot in my trading. I've learned a tremendous amount from Brian, Alpha Trends. And then I would say JT and TML Trader over at Ticker Monkey. Those guys too, big influence. Again, Can Slim, stay with the leaders, focus on the top growth stocks, try to buy the quality stuff that's acting well, pay attention to relative strength. Those are probably the guys that had the biggest influence, and I kind of take a little bit from each, and there's a lot of guys out there now, yourself and others, and Richard and Ray and you guys that I kind of do take a little bit, learn. You never stop learning. So I'm constantly learning from you guys and taking little bits and pieces from each and, kind of putting it together into my approach and strategy.
Yeah. Yeah. I feel like that's like the key to everything is that, you get exposed to so many people and then you figure out what really fits your personality. And then you just keep that, discard the rest, and you find somebody else, just keep a little bit from them, discard the
Exactly.
rest. And then you have
And
a
that
unique trading
never
system.
changed. Yeah, and it never ends. You're
Mhm.
constantly evolving as a trader, learning new things. As we'll probably get into, things that worked in the past have periods where they don't work, and you've got to adjust. And what's the saying? Adapt or die.
Yes.
You've really got to make those adjustments. Otherwise, yeah, it can be painful for a while.
For sure, for sure. And everyone wants to know what books did you had influence on you? So what books would you say had?
William O'Neill's How to Make Money in Stocks. That's always the first one. That's kind of the foundation for me. Everything I do is basically built, off of that foundation, following distribution days, follow through days, the chart patterns, the double bottoms, cup with handle. Those were kind of my introduction to the market. And to this day, that's, still a really huge influence on what I do. And then, you have the more modern take with the life cycle trade, with Kathy Donnelly and Eve and Eric. That's a great reference for IPOs. Really, really love that book. And I kind of, it has all new vocabulary and terminology, but it's a, like I said, a more modern take on what we learned and kind of builds on what we learned with William O'Neill's book, but a more modern approach. Minervini's books great too. Trading in the Zone for Psychology, Mark Douglas, another big one that has influenced me. I think that pretty much covers them. There's
Pretty good list right there.
good.
Excellent. And so for you personally, where was that aha moment that says, okay, yeah, I finally know, I think I know what I'm doing?
Okay. There's been many, but probably the biggest one that stands out to me is when I decided that, okay, I can block the noise by going to the weekly chart. And I still enter on the daily chart or even a shorter time frame. But once my cost basis is below the 10-week moving average, and it's got to be a quality stock. I don't do this with all the stocks, but something that's really strong, acting well. I've got that cushion. As soon as my cost basis is below that weekly 10 MA, I'll switch over to the weekly chart. It blocks all that daily noise. It helps with the shakeouts. It helps with just kind of seeing what's it look like on Friday. How's it closing late in the week? I can block a lot of that noise from early in the week, and I say, yep, I got that one kind of tucked away. But that was the moment when I realized, boy, I can have much more success holding on to something a lot longer and getting through the ebb and flow of the markets if I zoom out, rather than continuing to focus on the daily chart or even certainly shorter time frames.
Sure, that makes a lot of sense. Weeklies are wonderful, actually. The hard part, though,
Yeah.
is the hard part for me is looking at the daily chart during the week and then being able to say, okay, now trade off of that daily chart. So that's my challenge when
That
I
is
try
for a
to.
lot of people. Often you get shaken out,
Mhm.
and then it's early in the week, and then come Friday, it's reclaimed the 50-day moving average, or it's reclaimed in a pivot level, and you're like, had I waited till the end of the week and see how it closed on Friday, I'd still be in.
For sure.
So yeah, it definitely helps to block that and calm those emotions.
Yeah. They say fear is much more powerful than greed. At least I think it
Oh,
is, the fear of
absolutely.
losing, for
Yeah,
sure.
absolutely.
All right, so
Yes.
let's switch gears just a little bit, and let's talk about, like, I like to try to get into like a little bit more of the psychology of trading, because I think that's really important and probably makes up 80 to 90% of what we do, actually, right? The
Sure.
execution. So what do you do outside of trading that helps balance out your life and your trading life?
Yeah. Exercise, get away from the screens, get away from the monitors, take that break. Peloton has been a huge influence on me lately. I love it. And we've got a FinTwit group over there.
Mhm.
I'm not very competitive with it. I haven't had it that long, but it's there when I'm ready. And yeah, just getting that, whether it's a half hour or an hour, away from the screens, and just kind of giving my mind that mental break, away from the trading. And that I do meditation also.
Mhm.
I'm fortunate. I have both Peloton and Mirror, so
Okay.
I do meditation, with Mirror, and again, just trying to calm the nerves and the emotions and just break away from that. I've started getting back into lifting again. We set up a little home gym with everything that's happened with the pandemic.
Mhm.
So started lifting again, and really just taking that time for myself to just get out away from the screens and take a break, because it definitely can wear you down and sap your energy levels if you're just constantly focused. And and probably for you too, a lot of our research is on the weekends.
Mhm.
So it's not like we're getting this big break come Saturday and Sunday when the market's closed. In fact, I probably do more of my research on the weekends. So taking that time every day, and I've been pretty consistent about it, especially over the last couple months, of really taking that hour or so every day to escape and get some exercise in.
Yeah, yeah. I noticed when I do jujitsu, when I go in and walk through that door, everything leaves, and even my outside trading problems stays outside. I'm sure it's probably the same way when you get on that bike. All your problems kind of stay someplace
Yeah.
else. You're
Yeah.
focused on just what you're doing because it's hard. It's not easy. And then they'll wait for you when you get done. They're there for you.
Yes.
But
And a lot of times you come back with more clarity. You might be a little confused, or your emotions are more involved, or you may not see things as clearly. As taking that break, getting that rest mentally and getting away from it. Then you come back and look at it, you go, oh, all of a sudden, some things that didn't quite make sense to you become clearer, or your emotions are less involved. So yeah, it's definitely a good idea to break away and separate that and clear the head.
absolutely. Now you said you do meditation, which is pretty awesome. I've tried it a few times.
Mhm.
Had a hard time. I mean, a lot of people do have a hard time just kind of quieting the monkey brain a little bit. Um,
Yes.
but you feel like that's helped you quite a bit, the meditation,
Uh,
or has it?
yeah, it helps recharge.
Mhm.
I feel the energy levels, and it takes a lot of practice. Think I'm going on 2 years now
Fantastic.
of trying. Yeah, and it does take some practice. Yoga is good too. Another
Mhm.
one that I don't do as often as I did going back pre-pandemic.
Mhm.
Was doing like hot yoga, and I really enjoyed that. But it anything that can just take your mind elsewhere, and let the batteries recharge. You definitely can tell, and sleep's important too. Like you got to rest. I could stay up looking at charts, and sometimes I do way later than I should, but you got to just cut it off at some point, and get to bed and get rest. And I think that all adds up. um, Especially if you're not trading well, break away even more, or if it's a difficult market, pull back even more. I think those are things that you learn over time.
Yeah, I think the sleep piece is way underrated. The circadian rhythm and how our bodies function when we sleep and what it does while we sleep. Um,
Yeah,
Completely underrated. That's really, really important.
no doubt about it. No doubt in my mind.
And so, do you do anything to help kind of fortify yourself against trading? Because trading's there to beat you down, right? I mean, that's what trading does. It beats you down. So we have to be tough against it. What do you do to kind of help yourself for that?
Absolutely. I mean, it is something that is, in my opinion, not for everyone. And your personality plays a big role. Are you type A, type B? Are you able to pull away and relax, or do you get very emotionally involved in your wins and losses, and take that out to the outside with you. And that's one of the biggest things, is you have to keep that separate. Especially, I have family, I have kids. If it's been a rough market lately, I've got to keep that separated. I can't take that, with me. I need to be there for the kids. And, that affects my trading too. Sometimes if the kids have a lot of stuff going on, or maybe there's testing for my son or something like that, I'm probably not going to day trade or swing trade. I'm going to pull back, maybe it's a week, or maybe it's a few days. But I think it's really important to not just be in there trading, regardless of what the market conditions are, regardless of what's going on in your outside world. You really need to have a clarity and a clear mind, and not have the distractions. Because if you're going to come in and there's other things going on, and you're trying to take care of the kids and their responsibilities with school and that stuff, especially now that everybody's home, you're going to try to take care of that and get in there and day trade. They're going to take your money. You got to be focused, and you got to really be in that moment. Otherwise, you're better off just step aside, stay out of it.
Yeah, absolutely. So in the end, why do most traders end up failing? Because we know most traders fail, right? Very few actually
Yes.
make it.
The studies show, like 90% plus fail. And I think the main reason, they want to get rich quickly. So they trade with too big of size, and then they don't cut their loss. So you have a huge position that moves against you. You don't cut that loss, and it'll come back, it'll come back, it'll come back, and it doesn't come back. And that's it. And then you're done. And the money itself, a lot of people, when they start with trading, they're still working another job, or they're, have a part-time job, or they're students, they're in school, that type of stuff. So there's time to make more money. But what that does to you psychologically, wearing you down when you've lost your account, and whether you saved for a year or you save for 10 years to, get in and approach the market. When you get to where you've lost, all that money that you put aside, that psychological effect of getting back in, building that account up, and the fear of losing, that nest egg again. I think that's what most people, that when they've had that happen, they don't come back. It's the ones that battle through it, keep their position sizes small, cut their losses. Those are the ones that stay in the game long enough to be able to learn, their own strategy, their own personality, how to approach the market. Those are the ones that make it. But the majority just see, the glitter, and especially now on Twitter, they're looking at the Lambos, and they're looking at the P&Ls, the 7 figures that people made in a day, and oh, I can do this,
Right. Trading's easy,
and
right?
yeah, it's easy. I'm gonna get a Lambo soon. And then they wipe out, and then that's usually it. That's usually their introduction and their closure. Right there. But the ones that can survive and stay in it long enough, and everybody needs to go through those hits, those drawdowns, but if you can survive them and learn from them, that's when you start to really grow and learn as a trader.
Absolutely. I always say that, my wife actually helped me become the best trader I can be, because she made me have a very small account to begin with. You know what I'm saying? So even though I lost most of that first account, it was such a small amount of money. It was really tuition paid, for lack of a better term.
Yes. And, if more would approach it that way, more would make it, if you start small and learn small. And I do think it helps, even if it's the smallest amount of money, with the learning process, to have real money involved, better, more so than paper trading. That, and there are some benefits to paper trading in the beginning, if you're learning how to develop a strategy or who you are. But there's nothing like even the smallest amount of money involved, learning about yourself, your emotions. How do you respond to a loss? How do you respond if something's moving in the right direction? Are you taking your profits too soon? Are you able to sit back and let it ride? So even the smallest amount of money, I think, definitely helps with that.
Yeah, For sure, for sure. I'm a huge proponent of real, even if it's one share, doesn't matter.
Yep.
Getting those emotions in the markets.
Yeah, the Robin Hood traders that are only trading a few shares and that stuff, and especially when with these, there's so many that are introduced to the market, for the first time recently. I definitely think that's the way to go.
Sure.
Absolutely.
Absolutely. Yeah. All right. So let's kind of set the table for the type of trader that you are. So what time frame? You mentioned day trade, you mentioned swing trading. What do you usually do?
Yeah. Position trading, it was kind of like a modified position trading approach. The Can Slim, William O'Neill method, that's my primary account, and that's where my focus is on position trading. I do some day trading, I do some swing trading. A lot of times the market and the outside world dictates how much I'm doing of each. But on the majority of time, I'm focused on the position trades. I'm looking to get into something, get my 20% gain or more as quick as possible, take a little off, and then try to ride it, especially if I'm in a leader that's acting well, really strong stock, try to ride that as long as it'll let me. And, the studies show that some of those leaders go up to 18 months. So if I can grab something and hold on for 18 months, and trust me, there's a lot of ebbs and flows, over that 18 months. It's not usually a smooth ride. But if I can, like we talked about earlier, get to the weekly chart and stay on that for that whole ride, that's what I'm really looking to do. I'm not really looking to day trade. Sometimes I need to, and sometimes I do just because I can.
Mhm.
But the position trading, that's my bread and butter.
Beautiful. And so when you take on a position trade, what type of risk are you looking at? Like, what's your risk tolerance for that trade?
So, I depending on the market, I do things a little differently. If it's a really good, healthy, trending, market, I'll use the William O'Neill style, cut those, anything that moves against me, 7%, I'm out. A lot of times it's less than that, but it also depends on the market. Because if we have, and I'm really a small cap, low float growth stock trader early in the process. So a lot of times the swings are really, I mean, I can move 10, 12, 15, 20% in a day
Mhm.
with some of these stocks like TIGR and some of these others that I've been trading recently. The range is huge. So instead, I have to manage my risk with smaller size, rather than setting a stop loss at 7%. I mean, that could happen in 15 minutes. But the overall risk, of keeping that 1% of assets, I think that's how I manage with my size, and then my stop loss has to make sense. And I make sure that I'm not risking any more than one. Sometimes with slippage in that 1.5 to 2% on an individual idea. But if something's got a huge ATR, I've got to size down and scale down and maybe give myself a little more room, maybe 10% or 12%, depending on what the chart looks like and where I have to put the stop. So size is just as important as where I'm putting the stop in order to create that big picture of my risk tolerance.
For sure. And what is your position size of your account when you enter a position?
So the majority of the time I'm looking to start at 10%
Mhm.
and then build on that. I'd like to quickly get up to, especially if it's acting well and it's a leader, I like to quickly build up to 20%. But those are ones that are really, really strong fundamentals, relative strength. They're in A and B groups. Those are the true market leaders. Those are the ones that I'm trying to build a bigger position in.
Gotcha.
And those are also the same ones that I'm trying to hold, for a longer period.
True. Beautiful. All right. And so you mentioned risk. We talked about it a little bit already. So taking a step back, how do you think about risk? Like in a more, big picture idea.
In a big picture sense, how much total exposure I have at any given point.
Mhm.
How are the ones that I've taken recently performing? if they're acting well and I'm making progress, and I've got some gains, then I can start increasing my overall, portfolio exposure. Maybe, we've had a rough market right now. I was down to, under 50% invested and hedged. And now later this week, things have started to work again. Some of the newer positions are working. So slowly start, building up positions again. Maybe have a couple winners, take some profits off, maybe can add another one or two in. But I think looking globally, how much your overall portfolio risk is, especially if I'm coming in at 10 to 20%, I can have anywhere from 5 to 10 positions in and not be on margin. If things are acting well and I'm making progress, I'm more likely to keep taking that next trade and keep adding and building. Whereas if I'm not making any progress, or we're going the opposite direction, I'm getting stopped out, then I'm going to pull back, and not have as much overall exposure.
Yeah, makes sense. And do you look, like when you enter a trade, are you looking for a specific risk reward ratio, or do you just look at the risk side of it, of the equation?
No, I look at both. I want to make sure that the potential is there for a 20% gain. So that would mean whether we're coming out of a base, or let's say I'm buying something within the base off of the 50-day moving average or the weekly 10 MA, and I'm in the base. I need to make sure that the pivot, the top part of that base allows me to gain at least 20% or so, unless, let's say I'm swing trading, maybe I only need 10% because my stop is 2 or 3%. But in the back of my mind, I'm always looking at that 3 to 1, trying to get a 3 on the reward side versus every one I'm risking. So if I'm 3% risk, I've got to be looking at least 10% or more on the gain side. On a position trade, if I'm looking at that typical 7% risk, I've got to be looking at 20% or more, on the gain side. If that ratio isn't there, if I'm looking at the chart and that doesn't make sense, either because my stop is, 10% away and the gain is only 20%, I'm usually going to pass. I'm usually going to, move on to the next.
And you'll use measured moves and overhead supply and things of that nature to measure where the potential target would be?
Yes, initial target. Yeah, initial target, especially if I'm buying within the base, I'm usually looking at a move towards those prior highs.
Okay.
I don't always, now if I'm buying like a handle, let's say it's a cup and handle, and I'm buying in the handle on the breakout, then I'm looking at 20% from that pivot, traditional Can Slim, William O'Neill, way of measuring your target. But if I'm buying within the base, especially deep within the base, like you have some deep bases right now with the market, that we've seen correct. Some of these growth stocks have really corrected deeply. So if I'm buying off the 50-day moving average, I'm kind of looking at, okay, where are those prior highs, or where's the next level of supply? And I might be using a volume shelf. I might be using anchored VWAP off of the high. There's ways that I'm, technically that I'm using to determine those targets above. But it still needs to make sense with where my stop is. So if that risk reward is out of balance, I either wait for it to make sense again and come back into balance, or I just skip it and move on to the next.
Fair enough. And do you usually buy pre-market, market hours, open, close? Do you not buy within the first 15 minutes or 30 minutes of the market?
Yeah, I try. Yeah, I do. I try to avoid that first 30 minutes, unless I'm taking advantage of a move. So let's say we've got a big gap up open and I have something that's at or near my target, or maybe it's exhausting even above my target, I'll usually sell into that. And the opposite, if there's something I've been looking at and I want to take a position in, and we have a gap down open, maybe it moved just below a moving average or just below a pivot that I was looking at and opens there, I will come in and take advantage, but it's always the opposite of what the market's doing. So in other words, if we're gapping up, I'm not looking to buy something up in the first 30 minutes.
Okay.
I'm looking to take advantage of that gap to sell into. Or if it's a red open, that's when I'm not looking to take out any stops in the first 30 minutes on a red open, but I might be looking to enter something that I've had my eye on. And like we said, that risk reward didn't weigh out, but maybe the next day we get a red open and it's kind of ugly at the open. Maybe I get that opportunity. For the most part though, I definitely like to use the close, like we talked about, the end of the day, the end of the week. Those are always more important to me, than the open, unless I'm taking advantage of the gaps.
Beautiful, beautiful. And do you look at any macro data?
I don't really use it. I look at the reaction. If there's a GDP report or an employment report or something like that, what was the reaction to it? How's the market reacting to it? But I focus more on the charts. I don't really use that data, as much in my process, as some others might.
Yeah. It's funny, in the beginning, I used to try to figure all that out, employment numbers and this and housing starts and blah, 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 blah. There was no edge I could find at all.
No, and it's a lot of noise. It creates a lot of drama. I figured you're just better off. What's the reaction and what effect does that reaction have on the charts? Are we gapping above a support area? Are we gapping below? How is the news reaction affecting what's going on technically? I think that's a better way to use it than getting involved in all the numbers themselves.
Yeah, and chances are those numbers were already baked into that chart anyway. And so the price is actually already reflecting whatever it's showing you.
Absolutely. Somebody always already knows. Yes.
True.
Agree.
Sentiment. Do you use any sentiment measures?
Oh, yes. The put call ratio, that's a big one for me. I followed that years and years and years. The extremes in the put call ratio, definitely more success using it to time bottoms, because like you said earlier, fear is a greater emotion. So when we see those put call ratio extremes, we get, well, lately 1.0 or higher. In the old days, it used to take 1.2, even 1.5, or higher to have a bottom. But I think in the now QE days and that, I don't think sentiment gets as extreme as it used to before the market has a tendency to find a bottom and reverse. So yeah, but I definitely follow sentiment. I think it's helpful. It's an edge. And, now with Twitter too, you can use the sentiment there on Twitter to help as well. You have the troll meter, I call it. And when things are bad and things are getting ugly and people are losing money and they're getting frustrated, the tone on Twitter tends to change. And a lot of times that can signal a bottom too. When it gets its worst, usually that's when we're close to reversing. And same can be said at the top. True. Whenever the more P&Ls you're seeing and the more rocket emojis we're seeing, a lot of times, that's when you need to start to be more cautious.
Yeah, Leaf says when you start bragging to your wife about how much money you're making, that's time to scale back, right?
Yes, exactly. That's a great indicator. Yeah, absolutely.
All right. So you mentioned AVWAP, Brian Shannon. He's the master of it, obviously. But you do an amazing job with it too. How do you use that within your charts as far as anchoring goes, and where do you choose to anchor, and how does it give you a signal?
Yeah, I'm a big fan of using it on the power earnings gaps. I really focus on heavy volume, big price moving action where the analysts that are kind of caught off guard, whether that's the institutions or the funds, or they're all of a sudden, you have this huge volume up day that gets everybody's attention, 300% plus above average volume. Those are the days that for me, I'm gonna anchor to. I want to see how that action develops over the next few days. Do we dip slightly below anchored VWAP and shake some people out and then reclaim and off it goes? That's the pattern that, most often I'm looking for. Or does it hold anchored VWAP the whole time and just keep climbing? But those are the ways that I use it to kind of guide me. In the old days, before I was even using anchored VWAP, I used to use the high of the gap day, and so if we can take out that high, that's a really good sign. We're a lot of times these stocks are up 20% or more on that earnings release. So if we can get above that, I know that the institutions and the big smart money, they're piling in and they can't get enough shares, and I want to follow their lead. But using anchored VWAP has helped me determine, even with that gap, who's in control and when. And I like to jump in and jump on board when the bulls, have control.
Yeah. Excellent. And do you use that as, like, if something dips below and holds below the anchored VWAP from a particular point, will that be a sign to get out of that position, or do you not use that as a buy-sell signal?
No, definitely. If let's say it's reclaimed anchored VWAP, price has reclaimed, it starts to turn up. My assumption is, okay, bulls have control again. That should hold up. We should go. Now, maybe the market rolls over, or maybe there is some other news that comes out or something and it cuts below. But yeah, that's almost always my signal to get out. If we're back below. Now, if I've held it, made some progress, and anchored VWAP is still rising, the direction of anchored VWAP is important. If it's rising and we get a little dip below, but it doesn't close below, or it dips below, just barely closes below, that's in itself is not an exit signal. I'm going to need a little more information there, to get out. But if it's flat, or definitely if it's rolled over, yeah, you got to get out, because it rarely plays out that way. So when it does, it's like, okay, something's going on here, something's wrong. And 9 times out of 10 lately, when that happens, it's because they're introducing, and within the next day or two, they're introducing a secondary. There's a convertible. There's always something. It's like, oh, somebody knew, somebody knew this was going to happen, and it was there. It's in the chart, and then a day or two later, yeah, here's the announcement. So yeah, better to get out.
For sure. Better to be out, wish you were in, than to be in and wish you were out, right?
Right, exactly. Yeah.
Now, something I learned from you, which was interesting, was the anchored VWAP handoff, which is pretty cool. So why don't you explain what that is?
So when from base to base, you tend to be able to take those lows, or sometimes it's the breakout. You got to kind of study the stock a little bit. But Brian Shannon does an amazing job at that. And I learned that from him, is to watch for the next base to tag the prior anchored VWAP. So where that next base comes down and tags that anchored VWAP, a lot of times that's where it finds support. So then you add another one to that low where it tags, the stock tends to trend back up. Then when it's time to build that next base, it usually comes down to that anchored VWAP again, and that whole process starts over. So you keep handing those off, adding the anchored VWAP to the low of the next base. It's amazing how that works in all time frames too. It doesn't matter whether you're looking at monthly chart or you're looking at a 5 or 30-minute chart. It's unbelievable how that just tends to flow, with the trend and the bases. So definitely thank Brian Shannon for introducing us all to that, because it's powerful. And even with the recent market action, it's kept me out of ones and kept me from buying dips in ones that I shouldn't, that had further to go, and has also helped me, to time some bottoms and some bounces in some stocks too, because I kind of knew those levels and then can, watch for the price action to firm up.
Yeah, fantastic. And I've actually started using that in my own process, so it's pretty cool. Pretty
Yeah,
cool.
nice. Nice. Yeah, very, very helpful.
All right. And so something that's kind of related in some ways, at least I think it is the volume shelf.
Mhm.
So volume shelf, like how do you use the volume shelf? I've seen you start posting a lot more charts with the volume shelf on there.
Yeah. So what I'm looking for is areas where uh, the biggest volume areas are going to act as support or resistance depending on where price is. So I want to know where most of the participants in a certain base or pattern, where are they involved, and is price above or below that. So when you combine that, we talk about confluence a lot.
Hmm.
When you can combine that with anchored VWAP and your volume shelf or point of control, if price is above those levels, you can be pretty confident that the bulls and the buyers are in control. And whether you're looking at the indexes, the major averages, you're looking at individual equities, if you're below those levels, you know that the sellers are still in control. So you're going to want to see, price come through that level and through that zone before you take a long entry. Otherwise, you may be coming in right at resistance, and then you're going to, roll back over. So knowing who has control and at what levels, at what price,
Hmm.
really helps you with, especially with that initial entry coming in.
So it gives kind of a visual representation of supply and demand, kind of,
Exactly.
or maybe potential supply and demand, right?
Potential supply and demand, right?
Right.
And the psychology of those involved. You know that the majority are either underwater, so are
Hmm.
they up above price waiting to sell if they get the opportunity, or are the majority of holders in the green and looking good and
Hmm.
above those levels? So it definitely helps with supply and demand, and then knowing the psychology, of the participants or the majority of participants involved.
Yeah. Yeah. No, and I think the psychology of the participants is completely underrated, because then you could kind of anticipate what may happen.
Sure,
Yeah.
sure. And that's the patterns that we look at. That's basically what we're looking at with those patterns is the psychology of, the participants and where what they're thinking, visualized on our
Mhm.
charts in the patterns.
For sure. All right. So switching gears just a little bit. Your trading week. Where do you start your trading? Like mine starts on Saturday. That's always I have a process. I go through my routine, but it always begins on Saturday, and then I reset every Saturday my routine. What
Mhm.
does yours look like?
Very, very similar to yours. Friday evenings usually a review, of the week and some of the trades and what went right and what went wrong. Look at the major averages. And Saturday, that's when I start to study my focus list, which is my leaders. I've usually built a watch list through the week of relative strength through my power scan and velocity scan, and I have, these screens that help guide me
Hmm.
to build my watch list. And then over the weekend, that's when I'm getting more focused, narrowing them down, reviewing, the fundamentals of some of maybe the new stocks that have come up during the week or new stocks to the focus list, because it does change, every week. It actually gets updated every day, but it doesn't change that dramatically from day to day, but it does change from week to week. So getting myself familiar with some new names, what do the fundamentals look like? What do the charts look like? Yeah, that's definitely where it starts on the weekend, and then building that watch list of the best ones for the week ahead. I may set some alerts, on the weekend for certain levels to get tagged. That way, I don't have to try to watch, 5 or 10 stocks come Monday morning. I've got alerts set, and anything that's triggering, I'll get those alerts.
Excellent.
But all of that work is done on the weekends, when the market's closed. I think that's when you see things the clearest, not while the market's moving.
Yeah, 100%. And that changed for me also. A few years ago, of really doing my homework on the weekends or at night has been
So,
unbelievable.
yeah.
Unbelievable.
Homo
Um,
doesn't kick in on the weekends. You can think much more clearly and no emotions
mhm.
involved. Yeah, And you have to learn those lessons, I think, over time of jumping in something while the market's open that looks great on the chart, but you really don't know it. You've done no research on. And yeah, you just, whether it's you see it on Twitter or you hear or what, I don't have CNBC on anymore. I completely tuned that out entirely now. But a lot of times those were some of the worst trades, were the ones that you didn't do that research on when, the market was closed. You really don't have much conviction. Because, for me, it's the research outside of the market hours that builds that conviction. So yeah, those last minute trades, those are the ones that you really want to avoid.
Yeah, impulse. All right, so you are, I would consider you, and I think I may have heard it from you first, a techno-fundamental trader. Would you agree with that statement?
I would.
Yeah.
Yeah. And
Define that
yeah,
for me. What is that?
absolutely.
Yeah.
So we're combining fundamental data. We're looking for the biggest growth. Give me triple digit EPS growth, triple digit revenue growth. Give me a new product or service, something that's new and gaining traction. And a lot of times it's something that I know and use. Peloton. I had to, but that, it's something that I use, I enjoy. The chart took a hit, but it looked good, but the growth is there. We're on a Zoom call. This is another one that, taking a hit lately, but the growth here was just tremendous. So when you look at those, whether you're looking at the numbers quarterly or you're looking at them annually, the revenue numbers, the EPS growth, triple digit growth, the growth is accelerating. Those are the things I look for on the fundamental side. And I'm looking, like I said, quarter to quarter, but I also may be looking 1 year out, 3 years out, 5 years out. What does that look like? Because a lot of the big funds and big institutions, their models, they're looking a lot further out than most of the retail crowd is. So what are the estimates look like further out, and what's happening with those estimates? Are they climbing? Are they going down? What do they look like? As the revisions come out. So that's the fundamental side, and then but you can't buy off of that, because if you just blindly buy off of that, there's a good chance that you're going to end up underwater, rather quickly. So then we use the technical side, to time our entries and our exits and take profits and trim and, trade around that core. Like I said earlier, I may be in something 18 months, but that doesn't mean I bought it and just held, the whole time. I'm taking some trims at 20%. I may trim some off on a close below the weekly 10 MA. I may add back when it reclaims. There's a process of trading around that position, but you have to combine both, in my opinion. Just the fundamental side, your timing's off, and it's just the technical side. You may be in for a surprise as the stock rolls over, and the fundamental side hasn't rolled over yet, but it's looking out. Market's always looking ahead. So if you're looking out 3 years and earnings or revenues are falling off, and you haven't studied that, just using the chart, you could be a little late, to getting out. So combining that, technicals and fundamentals, and this again goes back to William O'Neill's How to Make Money in Stocks. A lot of the base that I built on is all, from that book.
Absolutely. Perfect. And so you mentioned that you run scans every day. I see you post on Twitter. They're great. You keep track of them. But let's go through your scans, and I really want to hear, what does the scan tell you? Right. So you're running the scan. Mm-hmm. What's the purpose of each scan, and how do you then use it? All right.
So yeah, absolutely. The focus list is a main one, the one I run on a weekend.
Okay.
That's the true market leaders. That's everything I look for. Revenue growth. We've got EPS growth. The forward estimates are strong. We're looking at, at least 30% annual EPS growth. Same thing with revenue growth on a quarterly basis. We're looking at top groups. So they're A and B, top 40% of the entire market. I do it through MarketSmith, and they have 197 groups that they track. So we're only looking at the top 40%, the A and B groups. Relative strength, these are going to be the best performing stocks, both compared to their peers as well as compared to the S&P. So that focus list is my big general true market leader list. That's where my focus is going to be for those ones that I want to hold for a longer period of time. Then I have the power scan. Now what the power scan is just relative strength. So when the market's been coming in and coming back, I want to know what's standing out, what's holding up well, because when the market does find its footing again, those are usually going to be the stocks that are the first to new highs, the first to break out of their bases. So I have that relative strength scan to guide me on what the strongest stocks are. And that one's updated daily. So daily, I can take a view of that and see what's on there. And then I have what's called the velocity scan. The velocity scan is low float stocks, and that's where my focus usually is. I'm not usually trading, Facebook and Apple and those, but the low float names, those are the ones that really tend to move. When you have them right, something's got, let's say 18 million, 20 million float, and it's doing 30 million shares on the week. I know that there's huge demand there. And so the velocity scan will highlight anything that's got above 30% volume on that day, above the average volume, and at least a 3% gain. So that's going to put that name on my radar. Now, that doesn't mean that day I want to jump in and buy it. But when I know that that's getting a lot of attention, there's a story there. Obviously, the institutions of smart money's piling in, because those footprints, when we see those big skyscraper green volume bars, we know that it's not typically the retail crowd that's coming in there and buying. There's something, going on. There's a story there. So I want those on my radar too. What I always say, where the magic happens is when I'm getting a name on all three. So when I get a name like apps, pops up on the focus list, and I say, oh, that was also on the power scan 3 times this week. So I know it's a high relative strength name. It's also on the velocity scan 2 days this week, so I know the institutions are coming in. So when I can combine those to where I've got a true market leader that's showing relative strength and also is a low float name that the big money's piling into, that's when I really focus on that chart, and that grabs my attention.
Absolutely. It's funny. I've run some scams myself. When I start seeing them all pop up, like that's exactly the same thing. Yesterday, Pubmatic, just all 3 of them. And then I looked at the chart, I'm like, whoa, that looks awesome. So anyway.
Same for me. Pubmatic's another one that yesterday, huge move, big volume. It's on it's on all 3 of my scans. It's one that, and as you saw, they jump out at you. I don't have to search through the charts, to find it, because it's on all of them and it's front and center, for me on a day like yesterday. It's hard to miss, actually, and I'm glad that you've kind of, got that part of your process too, because you really don't have to. If you find yourself really searching for ideas, it's probably not the right market, because in the right market, in the right environment, just like you saw with Pubmatic, Playboy is another one, just jumping out, off of the screen. Funko, FNKO is another. It doesn't have the fundamentals that I look for, but just jumping off the page yesterday and in the power scan and in the velocity scan. So yeah, you don't have to do much searching in the right environment.
Yeah, the charts speak to you, right? You shouldn't have to
exactly.
Look for it. Yeah.
And that's what I always say. They find me, they pick me. As long as I'm paying attention to the scans, those stocks are going to jump out and yeah, they pick me.
For sure. All right. You also do your inside day and outside day scans, right? So why
Yes.
don't you go ahead and explain what inside day, outside day is, and then how you use those scans?
Okay, so I'm taking the same watch list that we just discussed, the focus list, the power scan. I've built those watch lists of names. And then I scan that group for inside days. For me, inside day means it's consolidating, it's paused. So if I can match that pause up with the things that we've talked about, a volume shelf, maybe usually if it's an inside day, there's a triangle consolidation on the shorter time frame. Those, if the next day, if I'm going to day trade or if I'm going to swing trade, that's my go-to list of what I'm going to be watching and what I may be involved in on my short-term trading. And inside, I do at the end of the week, I'll do an inside week at the end of the month, inside month. Same thing goes for the bigger picture ones. If I have an inside week on a name like Peloton that I've been trading, it comes out of that inside week. Maybe I'm adding on, to a longer term winner or something like that. So I use that in all aspects of my trading. And I learned that the 3 weeks tight is one that we talk about with Can Slim, and it's the same type thing. It's a consolidation after a gain. So when we've seen an advance and we've seen typically a nice advance, 10-20% or more, and then we get that sideways action where price consolidates, and especially if volume dries up, it tells me there's a big gain here, but they're not selling. The smart money's not coming out, they're not selling. So probably a good idea, whether it's the inside coming out or that 3 weeks tight pattern, probably a good idea to add on some shares there when it starts to climb again.
So inside day consolidation, outside day expansion, right?
There you go. Exactly. So I want to look for those outside days too, because I know expansion. And the thing about the outside day, and I really only track the bullish ones because we've been in such a great market, not recently, but for the last few years. When you have a bullish outside day, you've already shaken out the weak hands because you made that lower low. So we've stopped people out on the downside. We've made that lower low, but we've recovered. So if we've recovered after we've shaken out, and Brian Shannon always says, from the false move comes a fast move. And that's exactly what I'm looking for with those bullish outside days. We've shaken out the weak hands. We've taken out the stops to the downside. And now we've come back up. So the buyers are still there. And a lot of times those bullish outside days are what guides me to the upside continuation in a stock. And especially if we're already in a good, strong trend.
Excellent. Yep. All right. And we've talked about fundamentals. So annual earnings per share is what you look at, or quarterly, or what's the most important fundamentals are you looking at?
But both. The earnings per share quarterly, I want to see, at least 30-40% growth. For a true market leader, that's what I'm looking for. But the higher, the better. So Peloton and Zoom and XP apps, some of these are all triple digit, EPS revenue growers. I love, I call it the double triple. Basketball, it's a triple double, but in trading, it's the double triple, where you've got earnings and revenues both growing quarterly at triple digits. Those are always going to get my attention. And like I said, there's a bunch of them out there right now, that I've done well with, but those annual growth is not going to be that big typically. Maybe you have 1 year where it's triple digit growth, but on an annual basis, if you're growing 30% or more, that's really strong on an annual basis. So the higher, the better on the quarterly. And then looking at the annual EPS, if we're getting 30% or better, that's really strong as well. And the same thing with revenues. And, the other thing you want to look at is acceleration. Is it accelerating, especially on the revenue side? I want to see, because the revenues are typically what leads to the bigger earnings down the road. So if I see a stock that's maybe it just tagged triple digits on revenue growth, quarter over quarter. But if we see it go from 30% growth to 60% growth to 100% growth, over 3 or 4 quarters, and it's a product that I know and I'm familiar with, that's really going to get my attention. Yeah, I'm going to jump. I'm going to be jumping on that first opportunity I get. If it's a new product or service too, that's gaining traction, and it's one that I know and have used and like, yeah, there's a good chance I'm going to be getting involved.
All right. So now that we set the table, kind of know what you go ahead and show us a premier setup, something that may be historical that you've traded in the past, that you I'm gonna go ahead and get you to be the host. Hold on.
Mhm.
Make host. Yes. Perfect. All right, you're now the host, so you should be able to pull up your charts and just walk us through what makes a premier, the technical fundamental side, if you can, and so on and so forth.
Are you able to see my screen?
Not yet. Oh,
How about
there we
now?
go. It's moving. Nope, I see your screen now. Perfect.
Okay. So this is apps, and this is one that kind of combines everything that we've discussed. Even coming way back here to the far left, you had this big power earnings gap. Look at that monster volume. That's kind of when it first gets your attention. And then you had this nice move. You took out the gap high, and this was on a earnings release. Came back, little shakeout there, but tested anchored VWAP, and then off it went. And this is kind of textbook as far as what I really like to trade. And it's amazing how many times you see this happen. Next earnings report, it does it again. Big gap, monster volume, anchored VWAPs there again. And this almost always happens when they go straight up, comes back and tests, shakes out a little bit, then reclaims that anchored VWAP. Then once it reclaims, off it goes. Here, I was discussing this the other day too. Leave that anchored VWAP on, because as you see, it was support over here.
Mm-hmm.
So when you get those gaps, those big EPS gaps, a lot of times later on when the market does correct and price comes in, it comes in right to that anchored VWAP, whether it's from the gap or the handoff. But those are the ones. I did it again here. And that's kind of where we're at now.
Mm-hmm.
So, the market's corrected, and you can see that within this choppy action. But now the market's recovered. Apps one of the first to quickly reclaim that anchored VWAP from the gap off here. So when you look at this on a historical perspective, you can start it back here. You add in here. Maybe you add in the dip here. You've probably also trimmed some on these moves, I trimmed some back here when the market rolled over. Actually, recently I got shaken out at about 75 in here, so I took it all off. But this has been quite a run. A great run, nice ride. Not an easy hold if you're looking at it on a daily basis, but if you go over to the weekly chart, there wasn't a lot of drama there. No. On a weekly basis. It was quite a run.
Yeah. This one I was actually in back in that $12 range and did not hold it. I got shaken out. I forget where I
back
got
here.
out, but shaken out somewhere around there. And
Right.
It's one that, you missed it, I mean, I've been back in it since a few times, but I didn't get that full run, which looking at this chart on the weekly, it looks absolutely amazing, right?
Yeah, but if you were watching it every day, it certainly didn't feel anything like what this looks like. And the only reason I know that, it wasn't because I was, involved, but I got a lot of messages, direct messages, notifications, all the way up. Are you worried about this? Are you worried? No, not worried, not worried. No, it was down 10% in the morning. Yeah, I know that's what it does. That's its character. And I say that too. They have character. And if you're going to trade something, especially early on, that's low float like this, you want to know its character. It has those shakeouts. It has those days that are, terrifying, and it makes it rough to hold if you're looking at it, daily. But yeah, if you're able to build that cushion and zoom out to the weekly, it was a lot easier to hold.
And I think also with a lot of the names that you trade, because many of them are younger companies, you're gonna be in a more volatile company. So when you look at the VIX, really, if you look at the VIX of your stocks, it's a completely different VIX than a VIX of the S&P or something like that.
Absolutely. And I think that's where the technical research, the fundamental research helps, because you can have a lot more conviction in something that meets all of the fundamental parameters that you're looking for. It's growing tremendously. It's growing rapidly. You see the big volume bars. There's going to be some shakeouts, but in the back of your mind, that the fundamentals are there to support a much bigger move. That definitely helps.
And so when you look at a trade, and we talked about patterns, are there certain patterns that you tend to go to? What's your well patterns?
Yeah, and I think this is a good example right here, this anchored VWAP, where you have the gap, the big volume gap, the big price move, you anchor to that. If the market was healthier over this period, you probably would have seen this move right here work. So what usually happens is we get that run for the swing traders. It pulls back, it shakes out, then it reclaims and turns that anchored VWAP up. So when it does that, this is usually the point where off it goes. But because the overall market, the general market was so weak, and growth in particular got hit pretty hard, we saw it, really slice lower and through anchor VWAP. And this is what we talked about earlier. When it takes that out, you gotta get out. So I did trim some, and then now we're back in a better position. The market's looking healthy. So what I typically like to see is this reclaim start to work its way up, pull back over here, turn this anchored VWAP back up, and then we'll pull the volume shelf. And I like to kind of really use this to zoom in on the most recent action. So you can see that on yesterday, we reclaimed the volume shelf, reclaimed anchor, and this is kind of the confluence that I talk about. So what you like to see is that start to move up, turn that anchored VWAP back up, then maybe pull back on light volume. And then that's your entry, your go signal. The closer you can get into that point of control, volume shelf, anchored VWAP, the tighter you can keep your risk, manage it in there. And then once it comes out, what I usually like to see, combining everything, all of this, let's get a little consolidation, pull back, and then let's get a little inside day, consolidation right here at support, and then see that inside day come out. That's like textbook entry for me.
Beautiful. Absolutely beautiful. And so when you look at these patterns, you're actually looking at, like you said before, trader psychology, right? So you're thinking, okay, so here's what's happening, here's what everyone's doing, and here's how I can take advantage of it.
Right. And looking at this is a choppy mess right now. So you can tell there's a lot of emotion involved. When you see this kind of dancing around it, and there's just a big battle going on right now. Between the bulls and the bears, and positioning between the big institutions. So yeah, I know right now it's not ready from my perspective. Even though we reclaimed, you see that red candles, the battle's still going on. You may even want to, in this situation, zoom out to the weekly even here. And when you look at the weekly chart,
Inside week,
you can see there's still a battle going on here.
yeah.
You do have that inside week. So like we've talked about, if we can clear that, and come out of there, we reclaim anchored VWAP. This is off the gap still, but you may want to put one on here from the high. It's almost the same. It's very similar as far as the levels. Yeah, so if we come out of here, and it's all about managing risk, right? So if you do take, even though this is choppy and if the market does look good early next week and this comes out, you can still take it. Just manage that risk. Use that anchored VWAP, or use, if the inside day comes out, if it goes back inside, maybe you get out, and it may take a couple tries, but the goal is not to miss the next move, that happens like this, while keeping your risk tight and your risk limited.
For sure.
And then if you look at the prior high, what was 92.50? I think where we, no, we cleared 100, 102.50. So there's room there. You're at 82 now. So you've got, if this does consolidate here and pull back and give a good entry, you have room, even if you're just targeting these prior highs, to trim some. You've got 20% gain there from this level to the prior high. So that's kind of, what we talked about earlier. That's kind of how I, look at that risk reward, is if I did enter here close to this anchored VWAP and I'm using this level as my exit, does it make sense to target here? Obviously I want to target through there, but what if it only comes up to here and then pulls back or rolls back over? I want to know that I can trim up here, and that risk reward makes sense.
Now, let's say, hypothetical, you entered this trade. It doesn't quite make it up to that high. It doesn't hit your target, and it starts to kind of pull back. Will you move up your stop, or do you keep it at the original spot?
Yeah, a lot of times I will move up my stop. I like using these prior lows. So what ideally happens is you come up, you pull back, your initial stop is going to be here, but then let's say you do come up to that prior high and then pull back again to form a handle, right? Then you're looking for that breakout. It starts to move up. You can move your stop up to that next swing low, but let's say it breaks out, but then quickly rolls over and that breakout fails. You're going to get stopped out on that swing low. So you've moved your stop up to that prior swing. The other option is to have this as a pivot. Let's say we use that high as your pivot. And let's say we come up and get that breakout, and then it pulls back and retests that pivot. You can use a close below that pivot as an exit as well. The only thing I don't like about doing that is this will tend to get crowded, especially if this bases out a little bit more and then pulls back and then goes to break out. That's going to be a crowded trade. There's plenty of eyes on apps. I prefer to be down here and get in where nobody else is really paying attention and waiting for this area. I like to be in the less crowded. Then I can let all this choppy drama, if that's what happens, play out, and I'm in from down here. And I don't have to worry about the breakout, the fake out, the stops getting run, and then the reclaim. I can avoid all that drama by playing down here. And that's kind of something that's evolved for me, over the last several years.
Yeah. I've actually transitioned to more of a base buyer than a breakout buyer.
Right.
In general.
Yeah. And it just, saving that drama. I'd love to see, when you do get that consolidation, that inside day, and it comes out, I love for that day to be big volume. Love to see a pocket pivot in there. Pocket pivot is the greatest, the highest volume we've seen in at least 10 sessions. I like to see that within the base when it does come out. That's always a positive sign for me.
Absolutely. And when you enter in one lot, and then you could add on later, but you just enter one time, right? You don't scan.
Yeah, not in small increments. I'm usually taking my biggest position right here because this is where my stop is the tightest. So, and I may add another, let's say I came in at 10%. I may add, if this comes up, is acting well, pulls back a little bit, I may add another, bring it up from 10% to 12% or 14%, something like that, rather quickly too. Before we get to this level, I'll try to add and build into that. could be even as high as 20%. I probably wouldn't do that in the current environment, just because things have been so choppy and we're not exactly in like the NASDAQ power trend days, where we're just climbing. But I may go from, 10% to 12% or something like that if things look good.
Perfect. And do you use a hard stop or do you use a mental stop?
I'm usually watching, so I know my level and I'll set an alert, but it's not a hard stop in that as soon as it's tagged, I'm out.
Hmm.
And that's usually because I'm able to sit and watch and I kind of know what's going on. And I know my level. I'll have an alert set at my level, but it's not a hard stop with my broker.
Yeah. Yeah. I use mental stops too. And actually, I use the Trend Spider alerts. If I'm at work, it'll alert me. I can usually take a couple minutes just to look at the chart on my phone or something. And I
Yeah,
already have a predetermined game plan. So that's
same.
kind of how I do it. But yeah, the Trend Spider alerts have been very helpful with that.
Yeah, absolutely. Absolutely.
Um, all right. And so, do you have a time limit on a position? This is something that I've really been interested in. Like, let's say you buy within that a base and it just doesn't start to work for you. What
Mhm.
do you cut it? Do you just stick with it? What do you do?
I'll cut it if I have a better idea, or if I
Okay.
have something that's,
Hmm.
if I want that money to put that capital elsewhere, and if the whole group is moving and mine's, sitting there, I'm in the wrong one. I've got the wrong one out of the group. I mean, that's kind of happening now where, semiconductor stocks are looking great and applied materials is looking great and taking off. And if, some of the others in the group aren't really moving. So I may move money in that regard,
Hmm.
come out of something if I have a better idea elsewhere, but not a specific time frame. No.
Okay. All right. And roughly, what's your average hold time for a position?
Probably I mean, it's about 3 months according to my data, but that is kind of deceiving because if I'm stopped out, it's usually within a few days.
Right.
So that kind of hurts the average. But a big winner and something that I'm holding, if I can, I've got a couple now that I'm coming up on the year mark.
Nice.
Peloton is one. Some of those stocks that I bought at the March lows in 2020 are coming up on the 1 year mark. So those are the ones that, that's what I'm aiming for, is to get into that and be able to hold for those longer term capital gains, but it doesn't always work out that way.
For sure. For sure. All right. And so we just went through a pretty nasty growth correction in the market. Um, how do you judge when the market is turning against you? Because this one was actually kind of stealthy. The index has held up wonderfully, actually, in general. Nasdaq not as much, but S&P and Dow Jones wonderfully. Yet growth got just annihilated.
Right. uh, Distribution days and portfolio heat. That's probably the way I judge it the
Hmm.
most. Those distribution days are adding up. 4, 5, 6 distribution days, it's time to back off. And then certainly portfolio heat. If I'm seeing the red, and getting stopped out, especially on the newer positions or even some of the longer term positions, I'm trimming because they're breaking support levels that I've highlighted. Yeah, that's usually a sign that, okay, it's time to pull back.
Gotcha. All right. And then how do you determine when it's safe to get back in once you pull back?
uh the follow through days,
Hmm.
looking for those accumulation days where the growth stocks act better on bigger volume, good price advances too. And then what are the leaders doing? You always want to focus on those prior growth leaders. Are they firming up? How are those? And you usually have a list of new leaders,
Hmm.
from the focus list. Upstart is one that I really, have a focus on right now as a new market leader. How is that acting? Is it holding support? Is it above anchored VWAP? I think focusing on those leaders, really, really helps. And then are my trades working? The new stuff that I added, Upstart, SI, some of the semis, those, if you bought those, are they working? Are they making progress? I think that helps, tell you whether you want to, is the market ready? Do you want to add more exposure? Or should you still be cautious?
Do you use your scans as a barometer too? On your
Absolutely.
scans?
Yeah. Over the last few weeks, I had some days where the velocity scan had two names, or four names.
Hmm.
So that's just a sign that, the market's not healthy.
Hmm. Yeah, absolutely. I've noticed that too. When the scans start getting zero or just a couple of names on them, but then when they start to repopulate, like just the other day, like I'm starting to see some, and then those the new leaders, right? The new growth, the new
Yes.
leaders, everything else. So it's
All of a
great.
sudden you go from 2 to 4 names, 5 names to 30 or 40,
Hmm.
and it can happen in a day. It can happen in 2 days. Overnight, it changes. Yeah, the tone of the market has changed.
For sure, for sure. All right, so let's go on to trading demons. What are your trading demons? We all have them.
The biggest one I probably have is that I'm way too optimistic. I'm always optimistic. I'm always the first one in the pool and the last one out of the pool, and I'm working on that. I'm trying to get better with that. But yeah, especially in the current environment, this is about as good as it gets over my 20 years. You have an accommodating Fed, rates are low, liquidity's, a driver, and we have plenty of it, more than we've probably ever seen, globally. So I've taken some drawdowns because I am too optimistic,
Hmm.
right now, and I should be more cautious rather than pressing all the time. So I'm definitely working on that.
Perfect. And so we all have a worst trade ever. Go ahead. Go ahead and share yours.
My worst trade ever. All right, this may not be what you expect, but
Okay.
off of the bottom last March, I bought Shop. I almost nailed the exact bottom. I think I came in at in the 320s.
Hmm.
And I had been watching, I had traded it before, but I had been watching specifically for that entry, for months. Got that entry, got in real quick. I had $75 in profit. So normally I would switch to the weekly, let that ride, and with all the noise and drama and pandemic and everything that was going on, I said, you know what, and I hadn't had a winner
Hmm.
because the market was so awful. I'm gonna just ring the register, cash this out. I'll jump back in, so 325 to just over 400. I never jumped back in on the way to 1500.
Yeah.
Yeah, so and it's on my list. I'm
Hmm.
watching it go up. I see, and I just, probably similar to how you felt about apps, where
Hmm.
like I had it, I was in, I had it at the right spot. I
Hmm.
was patient and took my profit, and then watched it go 4x from there.
Yeah. And like you
So
said,
that's the one that stands out for me recently.
every
Um,
week on the watch list, right? Every single week.
every single week. Every Saturday when I put the focus list out on Twitter and Shop is in the top 5, I'm reminded, of how I completely flubbed that trade. Yeah.
Happens, man. It's like, yeah, it happens all the time. All the
Yes,
time too, doesn't it? Like things like that,
absolutely. Absolutely.
or the
Yep.
things that
We're
you literally,
human. We're human. It happens.
I know, or things that are on your watch list for months and months, and you just never even took a position in, but just keep rising and rise, and you just never took that position, and just keeps
Yeah.
going and going and going.
Yeah. And psychologically, when you've been in at 320, it's hard to buy, even though you should, and the
Hmm.
chart's telling you to, at 600
Right.
or at 900. It's, you feel late,
Hmm.
but
Exactly.
really you're not. But it is hard psychologically when you've had that, entry where was absolutely timed perfect, to come in later when it's doubled. It's tough.
It is. It is. You know, and that's why I think trading real money, because on paper, you're like, oh yeah, I'd buy right there for sure, and buy here and do this and do that. But when it's your
Yes.
money and real money at risk, it's
Yeah.
different.
If you don't have those scars from earlier,
Hmm.
yeah, it's a different story. It's a
For
different
sure.
game psychologically.
So, what causes you not to adhere to your rules? Is
A
there
pretty
anything?
chart. Setups,
Mhm.
there's times when I know it's too early. I should be waiting on a follow through day. I shouldn't be involved. I shouldn't be, but, you know, the setup looks perfect. And I say, I'll go ahead and get involved. Maybe I'm just going to day trade it. The day trade works. So
Mhm.
it turns into a swing, or a part of it does. And then the next day we gap down and flush out, and I'm stopped out. And it was all for naught. I was better off of just, or even a small loss, I was better off of just sticking to my original plan and avoiding it entirely.
And do you do anything to kind of guard yourself against breaking your rules?
Um,
Do you keep rules maybe it's on your monitor, or do you do anything that kind of reminds you, or?
well, I do. I realize that as time's gone on, I'm more discretionary now than I ever used to be.
Mhm.
So I don't, on those trades and stuff, I don't beat myself up over it. Like, I know better. I know that I shouldn't be involved in that trade. I know I should be waiting on the follow through day. I should be waiting for growth and the leaders to reappear and
Mhm.
and reclaim certain levels. But yeah, it's again too optimistic, too anxious to be the first one back in. And those are the rules that I break the most, and know that I shouldn't. um
And then do you beat yourself up after it, or do you just like how do you get over that, like a poor trade or something where you just know, man, I should have done that, you know?
I move on quickly. I look
Yeah.
for that. It usually only takes one or two stops when I'm early
Yeah.
to realize, well, that was stupid. I'm going to wait. I shouldn't have done that, or I shouldn't have put that on, or the market's not ready yet. Those are all signals and feedback.
Mhm.
So I just chalk them up to, it's the price of doing business.
Yeah.
Wasn't ready. Sure, I'm trying to get better at it. I'm trying to, certainly trying to avoid those instances as much as possible. But I really move on quickly. And I think that just comes from time and experience, because if you really beat yourself up over it, then you do miss the turn. Then it comes a few days, and a lot of times it's within a few days or a few weeks of when the actual turn comes and things start working again. So if you're still beating yourself up over it, a lot of times you're going to be, gun shy and not pull the trigger when the right time comes.
Yeah, absolutely. Absolutely. I think position size, like you mentioned before, helps keep you from actually hurting yourself too bad, even when the trade does, you break a rule or something happens or
Yes,
whatever.
and I will come in with smaller size when I know I'm a little early. Maybe I come in at 5% or 6% size rather than 10 or 12%. I will, and we call those, the feeler position or
Hmm.
starter position. We put those on just to kind of test the waters,
Yeah.
and see how it responds.
For sure, for sure. All right, so switching gears one more time is going to be social media, because I think we all used FinTwit and so on and so forth. How do you use Twitter to your advantage?
I think, we talked about the troll meter earlier for timing the bottoms.
Hmm.
The more obnoxious it gets over there with people that are coming in, people that don't follow me,
Hmm.
chiming in. They have no idea what I do, slamming me for valuations and PEs. And, the more abuse I take on that, the more I know we're closer to a bottom. And then the opposite, the more euphoric it is, the more everybody's high-fiving, sharing their P&Ls. I think the more okay, time to get a little cautious. Like the Leif's example was great.
Hmm.
Yeah, if I'm ready to run to my wife and say, look what happened today, look at the bottom line. yeah,
Right.
that's usually a sign that, and the same thing when everybody's anxious to share their bottom line for the day, that's usually a time to get defensive.
Yeah, for sure. So, how do you control the platform so it doesn't really create a lot of noise in your trading life?
That can be tough. I try to stay off of the timeline during market hours,
Hmm.
so I'm not real focused on the timeline. I'll still check my notification questions, and I'll still put some stuff out there intraday in real time, but I'm not scrolling through what's everybody else watching, because yeah, I avoid that noise. And then I think that's um a huge mistake for the beginners who are trying to learn, is just blindly following ideas that pop up through the day on Twitter. We all do it. We all have our favorites and see these guys that are, we know who the hot hands are and who's been on fire, and they put this trade idea out there. I think avoiding that during, while the market's open and during market hours, is a good way to avoid the noise.
Yeah, good, good advice there. Um, do you use any other social media besides Twitter?
No, I used to be on stock twits, but not anymore.
Yeah,
Yeah, just Twitter.
me too. I used
Trust
to be.
me, that's enough.
Yeah, exactly.
Yeah, yeah, just Twitter. That's enough noise for me.
All right. And you've started using YouTube some. I've seen some of your videos.
Yes.
They are awesome, by the way. Just
Thank you.
yeah, very, very cool. So kind of what's your plan with that medium?
So I was blogging, but it's really hard to get the message across in the blogs a lot of times, and these long posts, and nobody wants to stick through and read all that as much as a 5, 6, 7 minute video to get a concept across comes out so much clearer and easier, and I get so much more of what I want to demonstrate or what I want to teach into that. So I fought it for a long time. I fought doing it, but it's really come across well. It's the feedback has been tremendous, and I think people are really enjoying it and getting a better idea of what I do and how I trade, more
Mhm.
so than just posting the focus list or posting a blog post, on the website. So.
Yeah, no, they're awesome. I watch all your videos. So excellent job, man. Excellent.
Thank you. Same. And thanks to you and Richard, you guys kind of led the way on that. So really do appreciate your inputs and your videos, and yeah, a must watch for me.
Awesome. Thank you, man. All right. So post analysis. Your trade is done. It's in the books. What kind of post analysis do you do on that trade, if any?
If I'm day trading, it's usually that night, review
Okay.
it, or even swing trades when I exit, that same day while it's fresh in my mind after the market closes. What went right, what went wrong, review that. And then on the weekends too, focusing on the whole week, how things went overall. And was I usually, it's, if I had a rough time day trading or swing trades, it's usually because I was on the wrong side of the tape, taking longs in a in a correcting market. Reviewing outside of market hours, I think, is a must, and it doesn't matter how long you've been doing it. Now, I don't go into detail as much as I used to.
Hmm.
I used to write everything down, all my thoughts and everything I was thinking. I don't go as detailed into that, but I'm still doing post analysis, after all the trades.
Perfect. And do you keep a P&L?
I do. I don't. It's all automated, so I'm aware of it, but I'm not focused. I'm certainly not focused on it during
Mhm.
the day. A lot of times, I can't even tell you if I'm up or down on the week, but I can tell you, on the month, how I did each month, and then staying focused on some of the other metrics as well. For example, what's my win rate? What was
Mhm.
my average gain versus average loss? Like, those are all things that I'll keep track of and make sure that I'm staying in some parameters that I've set for myself. One of my biggest goals, and I shared this earlier in the year was to try to hit 50% win rate. This year, I've been right there, on the border 40. When things are going good, I'm at 52, then it comes back 48. I've been right on the border, but I'm really trying to close out this year at a 50% win rate. That's a big goal for me this year.
Awesome. All right, so let's go ahead and wrap it up and talk about some few good setups. So obviously people would love to see what you're looking at right now. Today is April 2nd, 2021. Just a few things that you're looking at that just look absolutely amazing and maybe are on your focus list.
We talked about this one, UPST, new leader. I really, the numbers are improving. It gets my attention when I see this big power earnings gap, big volume, consolidated nicely now. Look at the volumes eased up. This group that bought over here, they're not anxious to sell. You can tell by looking at that. Anchored VWAP off of the gap got reclaimed here, was support over here. Anchored VWAP off of the high has now been reclaimed. So now you watch for this, descending trend line here to get taken out. And I came in as we came through this anchored VWAP here. And so this is one that I'm really excited about and I think has a bright future. So that's also one, like I said, one of the ones I'm looking at as a leader, because not many stocks are up here by their highs. Most of the stuff is trading down here, at the 50 or even below at the 200. So this one up here near highs, true market leader potential. It's one that, stands out to me and had to be involved in.
For sure. Right. Any other ones, or is that the one you want to share?
No, we talked about this one too, so we might as well take a look at
absolutely.
Pubmatic. This is basically my view of it. Anchored VWAP off the high, anchored VWAP off of the gap. As we typically discuss, these need to turn back up now. Maybe price makes a little higher and then starts to pull back, and that's when I like to get involved if I didn't get involved down here. As these turn back up and price retests those levels, that's where I look to get involved. Get an inside day over here somewhere as it comes in and then comes out. That's where I like to get involved. You may have also heard me discuss power of three, and that's where the 10 and the 20 and the 50, see how tight they got right in here? And when they get real tight like that and then price reclaims, I call it, power of three, because now as price comes back in, these moving averages get back in alignment. So far, the 10 hasn't crossed back above the 20. This is red. This will turn green when the 10 crosses back above the 20, and then you have the 50 below. So you have 10, 20, 50 back in alignment, and the providing support as it makes its climb. So that's another one that has my attention and really staying focused on. The other thing, like we talked about too, we haven't reclaimed that high. I'm not in this one yet. I'm focused on it, but I always like that high too from this big power earnings day in this gap. So I'll keep a tight watch on that, high from that day as well. So it's not only anchored VWAP, that I'm focused on. Yeah, you've got nice support. That this was not a bad entry on that power of three, because you had volume shelf point of control there, and you real tight up against those moving averages to manage. But I think there'll be plenty more opportunities with this one, especially if the market stays choppy. We'll probably have an opportunity for a good tight entry there. Hopefully. I've got. This is another one I'm watching. Kind of broadening formation here. Another one that is up high, near highs. Good numbers. I'm not really familiar with the product, but we read some reviews, and it seems like very, very popular and gaining traction. The revenue numbers show that. And then you've got another one of those power three setups forming here where the 10 and the 20 and the 50 are all real tight. Volume shelf here, point of control. So this is another one I've got my eye on. And then I love that you can have a clear target, up here of this, because you have kind of a broadening formation here. So you can target those highs if we, clear these levels back here.
Beautiful, beautiful.
And then I got one more, and I think a lot of people have this one on their radar, is Pinterest. And you can see this one too, kind of flirting with off of the gap here, the power earnings gap back here, dance around it, then the market rolled over, and now trying to reclaim. So same thing here, you look for that reclaim, turns the anchor VWAP up, price comes in, consolidates, retests, and then maybe get an entry there with pins. This is one that my wife uses, friends, family, everybody's involved with it right now. Great numbers, another one that has the potential, to be a leader.
Yeah. Yeah, my daughter actually I just gave her a little bit of money to start to just try stock trading a little bit, and this was actually the stock that she bought. Yeah, so
smart girl.
She's doing okay in it so far.
Yeah, so far so good. And you like to see this kind of action when the market does start to recover, where we say beach ball underwater, where bounces right away as soon as the market starts to look a little bit healthy. You get this big type of bounce and move and reclaim. So definitely one to keep an eye on and see if we have another true market leader here, going forward.
Yeah, looks great. Looks great. Excellent. Thank you for those.
Cool.
I appreciate that, Ben.
Welcome.
All right. So, closing statement. What do you want to say to any advice you want to give to wisdom to either experienced traders or even newer traders? Give them some of your wisdom.
Yeah, I think this would apply to both. Do your thing. Like, you don't want to be someone else. You're not going to be the exact trader of someone else. You're not going to have the same risk tolerance as someone else. Your personality is different. Your time frame's probably different. Your pain threshold is different. So it has to fit your strategy, how you trade, the time frame that you trade has to fit your personality. Don't let anyone tell you there's a right way, there's a wrong way. There's so many infinite number of ways to do this and to extract money from the market. You got to find your way. And probably the path that works best for you is one that nobody else is doing. It's going to be unique to you. It's going to be your own strategy. That only comes, with time and experience. And like we talked about, picking up pieces of things from different traders. This would work for me. This sticks. This resonates with me. You may find another trader that does something and you say, that doesn't make any sense to me. And that's fine. Just ignore it and move on, but never stop learning, never stop developing your own style and your own strategy. And you will see that pay off in time. The longer you can stay in the game, you'll see that things start working. You figure out yourself, your own strategy. Discipline is important. So you've always got to stay disciplined, but disciplined within your own strategy. What works for somebody else may not work for you. So make sure that, you're doing something that fits. Anything that feels like, man, that's just doesn't work for me, or that doesn't add up, or that time frame's, too fast or too slow. Don't be afraid to do it your way. And that would be the main advice. And that's, you have experienced guys like Canny that was a position trader for years and then becomes a day trader. And you have day traders, that, have swing accounts and long-term accounts. And so don't be afraid to mix and match and find what works best for you.
Yeah, That's great. Great advice. All right. So where can people find you online?
So at Pattern Profits on Twitter, got the YouTube channel Pattern Profits, and then patternprofits.net is the blog where I share a lot of the scans and some ideas. You can find the videos there as well.
Beautiful. Ben, appreciate it. I think that everyone's going to enjoy this very much. So thank you, and good luck.
All right. Thanks. You as well, Jack. I appreciate you having me. And thanks again for all you share as well. And it's always a pleasure getting to talk to you and share trading thoughts.
Absolutely. We'll do this again soon, hopefully.
Sounds good.
Yeah, man. All right. Bye.
Thank you.